Good afternoon, everybody. Welcome to Trader Merlin Show. It is your Wednesday edition. It's Fed Day today, so we will talk about the Federal Reserve announcement, Jerome Powell a little bit. Just for housekeeping stuff, everyone knows I'm not doing a show tomorrow because markets are closed, and I'm going to have Bill Addis on the Friday show. Normally, I don't like to have guests on Friday show because, I'm drinking. I don't want to get anybody in trouble, but I wanted to have Bill on tomorrow, but I won't be doing a show. So Bill has said he's going to go and be my guest for Friday. So we'll talk a lot more in depth about what Jerome Powell said today, which, I'll be honest, total snooze fest, right? I mean, everything was as expected. I even kind of sarcastically tweeted out today a little bit about what I thought was going to happen. And honestly, it exactly like I thought it was. And I'll bring it up here so you can check out that Twitter feed. Rates stay the same. Slightly dovish dot plot, so let's go look at that here, just so we can bring that piece up. Here is your dot plot. Now, you can see here in light blue is the March projections, and then in dark blue is your June. For 2025, I mean, it was slightly more hawkish, not dovish, but a little bit. You had a couple more people thinking that rates were going to go up in 2025. I thought that was kind of interesting, based over changes from last month. So Andres says, share whiskey with Bill Addis. I don't know if he's a whiskey guy. Maybe one of these days I will. I'll send him a bottle so we can have our shows, drinks on the show. And then, you look at this dot plot, and I think it's actually really stupid, personally. The reason I say it's stupid is they have no clue on this great green earth what's going to happen in 2027, right? There's just so many things that could happen. I think that this is absolutely irrelevant, the 2027 and longer run. So the right-hand side of your screen here, ignore it. 2025 is the only one that we can really put our kind of forecasting hats on because we've only got 6 months left to go, so it should be okay there. 2026, though, it looks like a much more spread out expectation, and certainly that's a change over what we had happen in March with regards to their projections. It's just more spread out, and I guess that gives us less indication or clarity as to where it's going to go. If you look at March's projection, most were anticipating, roughly 3.25% for the Fed funds rate by the end of 2026. Right now, it's looking to be about 3.8, 3.9 for the end of 2025, and that kind of sticks there. Now, I'll also go and show you the CME piece here. This is for July's meeting. So the next meeting is going to be July 30th, and there's a 89% chance they're going to keep rates the same again. And Jerome Powell's comments today didn't really do anything to give us any clear direction. I can go back to my tweet. I still use the word tweet. I don't know, I'm old-fashioned. I said, data-dependent, shift focus the uncertainties, which is tariffs, Iran, and Israel conflict, optimism on inflation, unemployment, and growth, hints at rate cuts later this year. That's pretty much it. I think that was exactly what was said. I didn't get a chance to finish watching all the press conference, but I did watch a bit of it, and there was really nothing there that was that exciting. Now, for the end of the year, I'm seeing mixed numbers here. Some people are saying 2 rate cuts. Some people are saying 3. I agree with you, Margaret. It was boring. I like it when they ask edgy questions that really require him to kind of think on his feet. Now, I'm pretty sure when Jerome Powell goes to these press conferences, they're grilling him. His wife's probably at home going, okay, they're going to ask you, what's your thoughts on the inflation numbers? And he'll have his boiler cut stuff. I mean, great, the guy gets to meet every 6-8 weeks and gives speeches on the stuff. He has got it down. So, yeah, it's boring. I would have preferred something more exciting. And one of those moments like, did he just say that? But we didn't get it. So here's for the end of the year. Right now, you're looking at about a 42% probability that we're going to get 2 full rate cuts by the end of the year, 2 25 basis point rate cuts, bringing us to 3.75 up to 4. So that is probably where we will be headed. And I hate to agree with this chart. I have not updated our graphic table here. I'm trying to add in I'm going to make it a little bit more intriguing by adding in a Fed column that shows when they held or kept the same or changed. But I'll update my table that I was building, kind of like my Fed forecaster as to what they're going to do. And every month that this continues on, we're going to see more and more pressure on him to cut rates. So I certainly think, based off what we have now and that kind of trajectory of where our markets are going, GDP is of concern, but if the tariffs get resolved, that should fix GDP a little bit, at least remove the uncertainty. Unemployment under control at 4.2%. You have inflation under control, although I think time might change that a little bit, but certainly nothing looks that extravagant. Looks like you bought that t-shirt a long time ago. Oh, this one's well worn, Margaret. You know when you have those t-shirts you just don't want to let go? You wash it so much it's got these really subtle holes that makes it look trendy. This one doesn't have any holes in it yet. Oh, but it will. Oh no, I spoke too soon. Got holes right there. Thanks, Margaret, for calling me out on my vintage. It's called vintage, Margaret. I think this was actually Old Navy. Just so you guys know me well enough. This is probably like a $5 shirt I got from Old Navy, and I've worn it like 7 million times. I'm going to get value out of the clothing that I get. Oh, man. I have a feeling I'm going to get Scrooge comments come to holidays from you guys. Roger Waters is watching. Good. I'm getting my money's worth, Kenny. Absolutely. We should. It's funny. You ladies blow me away because a lot of times you women, you'll buy, this is a very sexist comment, I apologize, but you'll buy like a really nice piece of clothing and you might wear it like once every 2 or 3 years. Us men are like, I'm wearing this thing into the ground and I refuse to get rid of it. As John O'Donnell used to say, I've got socks older than you are. I'm like, John, time to get some new socks. No, Oliver, it's not from Five Below. This was Old Navy. Old Navy had the rock shirts going on, and it's one of my favorite Pink Floyd albums. Animals is a great album, just very different than what you would normally hear from music. So there we go. Okay, enough about me and embarrassing me and my frugality. Let's go back to this. So right now they're expecting 2 rate cuts, and I hate to say it, I'm falling into that camp. Now this could certainly change very quickly. Remember, we had Bill Addis on the program last time we had an FOMC statement, and he thought we might actually see a rate hike this year. And at the time, we had an environment that would kind of indicate that, right? Inflation was still ticking up, and we had a lot of global uncertainty. Will be very interesting to see how he changes his tune on Friday, if he changes his tune on Friday, because I don't think we'll see a rate increase this year. I think we'll see a rate cut. And that it was kind of interesting because here, if you look at the dot plot, most of it stayed the same, but notice that there's a few more members have shifted upward, meaning that the rates by the end of this year are going to be higher, not lower. And I thought that was actually this is kind of staying right where they're at. So this would indicate 2 rate cuts, but more people have indicated maybe fewer rate cuts. So 1 or 2. Why lower rates if everything is under control? Good question, Luis. And let me see if I can come up on the spot with a really simple analogy. Okay, here's an analogy that I've just made up. Let's say you're a professional race car team, right? And you got a new car, it's all kind of new different components, you got all kinds of new parts on it, you got a new motor, you got new brakes, you got new gearbox, and it's flying around the racetrack. And you've done a few laps, but you haven't really juiced the car, right? You haven't really gone full bore. You're testing out to see if anything breaks, and you got computers that are giving you data. Right? In Formula One, they've got walls of data input on every aspect of that car. So now you've done 5-10 laps around the track, and your team's like, Roger, everything running smooth. Our data's looking pretty good. Let's step it up. Let's step it up 20 miles an hour. So they juice that car, and they go a little bit faster, and a little bit faster. And they keep going until you push that car to its limit. And I know it's a really bad analogy, but I would argue that it's actually works for our U.S. economy because we've had all these changing components. Politically, macroeconomically, you have a lot of factors here that are driving these markets, and they're all pushing in their own different direction. So it's like the cars going around the track of the economy, if you will. And now we've done multiple months of laps around that track. Why not push the car a little faster, right? Why not try to see if we can get this economy heated up more? If it's running smooth with rates right at 4.5%, what if we drop them to 4.25? Give it a little bit extra gas. And it's not like we're trying to ruin the economy, but why not? If everything else is smooth, meaning unemployment is good and not showing signs of cracking, inflation is under control, and that's a big question mark in most of our books, why not give the economy a little bit of a kick and see if we can get that GDP number to increase? Because if I lower rates, and I'm Jerome Powell, I've essentially given the economy more gas, which means employers are going to have access to cheaper money, which means they may hire more. That may increase domestic production. And Luis says, because if it blows up, then we have no more engine. True. Now, look, if Jerome Powell came out and said, let's cut 75 basis points tomorrow, all hell would break loose. But we've been constant. Let's go look at Forex Factor here real quick so I can show you the calendar for today. If you look at where we are at, here's the picture of it. Okay, let's get past all this crazy stuff and just zoom in a little bit here. Notice that for the past 5 meetings, we've remained constant. And in my opinion, it's pretty good to have the economy where it's at, not having wild fluctuations, knowing you've kept rates at 4.5%, right? Totally agree, Big Eb. GDP is kind of weak. To me, that's the piece that the Fed doesn't have right now. They've got employment under control. I'm reading the headlines here. They've got inflation under control, and I still don't think that that's done. But those two headlines are their dual mandate, right? He mentioned today that the economy, he's looking at the overall economy, which means GDP is a factor there too. So we've got two of the components the Fed is supposed to pay attention to under control. Well, if I can lower rates and keep those two variables under control, which is my mandate, then it helps out the economy. It makes my legacy look better because we'll have a roaring market, economy looks great, and I'll look at like this hero. I'm speaking for Jerome Powell here. So that's why we would lower rates. Personally, do we need to? I would argue no, absolutely not. I think you keep it right here. We're humming along and, give ourselves another 3 months, 6 months, a year worth of data. And if the markets are still doing really good and no signs of cracking, then maybe we drop it. But there is no real need to unless you want to juice the economy. And of course, President Trump wants what? He wants the economy juiced, right? As a president, you want people to look at you and go, hey, this guy caused huge market rallies. My portfolio's gone up. GDP looks good. Everything looks great. So certainly, I think that is the main factor here is the political pressure influencing Jerome Powell. But if he's true to his word, and so far I believe he is, data dependent is the key, which is why I was really surprised to see on the dot plot a few of the voting members actually stay the same and not look at cutting rates, right? If anything, this has actually shifted to slightly higher. Steven says, I think the housing is getting a bit stagnant, not in trouble yet, but could boast. Okay, so let me give you guys, I know this is not the answer, and we have many realtors that watch this program, so I'm sure you could weigh in on a little bit more. In times of market exuberance, when things are great, you're seeing a lot of houses for sale, or at least people holding on and then selling houses and bidding wars for those properties. I get emails every day. I've been looking at multiple places to potentially buy some real estate. I've been looking in Petaluma. I've been looking in El Dorado Hills. And where else have I been looking? I had another one. I had Big Bear on there as well because I thought about getting investment property up in Big Bear. And I'm doing that through Zillow. We all know Zillow is not the real market. However, I've noticed lately that probably every day I'm seeing houses, prices dropping in certain areas, which tells me that the market is slowing down. Louis says, come to Arizona. Too hot for me, brother. Too hot. I like dry heat. I also like desert climates, but I don't want no consistent weeks of 100 plus degrees. That's just not for me. Not for me. Remember, I got vitiligo. I'm in a sunny spot enough. That's bad. That's bad enough. But I have noticed a lot of price cuts. And those price cuts to me are reflective of the comment that was just made, which is housing markets getting a bit stagnant, meaning buyers aren't buying. And that could have to do with the rates that have gone up a little bit. If buyers aren't buying and the sellers are like, oh, I was going to sell for $500,000, how about $485,000? And as soon as you start to see that dropping, to me, that's a negative sign for the market. And it's not saying the market's going to crash. Please don't take it that way. It's one of thousands of data points that we have to look at to assess where these markets may be headed. So to me, that was an interesting one. Big Ed says, but the other eight, oh, you're talking about Arizona. Steve says, I'm in Arizona. The market is a bit slow, but not in trouble, but homes are now on the market. Yeah. I don't think we're in trouble. I don't want to allude to that. But is it a warning sign when a lot of the properties that are on the market start lowering their price? I would argue yes. That certainly does not mean a market crash. Just means that maybe those prices got a little too lofty and now they're coming back down to a normal valuation or something more reasonable. But yeah, I don't think we're going to crash here. Look, if we see that 10-year stay where it's at, and here it is, that 10-year for the past month, almost 2 months, has really been kind of just flirting sideways. right? It really hasn't done too much. Now, I'm optimistic, or at least my thoughts are that this is going to continue to move higher, but it's starting to look a bit weaker and weaker as we go. So this, to me, will be a big determinant on what happens with housing prices and certainly economic optimism, right? The more that people feel happy about what's going on in America, the more likely they're going to spend and maybe even buy some more homes. So right now, I'm not bearish on real estate, but it is interesting seeing a pause. And if we can go to the economic data here, let me real quickly just bring up, I have to change this filter to go to US only. Let's go none, I'll show you US, and let's just go into housing, just because I want to look at the S&P Case-Shiller Composite 20 Home Price Index, which should come out next week. There you go. You know, you look here, and this also tells an interesting picture about real estate. Really, and I know you guys that listen to the podcast can't see it, but back in 2022, you know, we had 20% year-over-year growth in home prices. Ridiculous. I mean, that's just unheard of. And I'll scroll back here so we can look past, you know, maybe going all the way into 2007, and we never had that kind of growth. I mean, that was just a one-off. Anybody here who owned one was like loving that, right? But if you look recently, let's go past the giant spike in 2021 and go back to where we are now. Since 2023, we've really seen, I would say on average, sub 5% growth. Right now we're at 4.1. Now people were gobbling up real estate because prices were appreciating so quickly. And now that they're actually underperforming historical market norms, money may start to flow out of that. And I just say start. I'm not saying, again, that this is going to crash, but you know, this is fairly low growth rate at 4.1% compared to what we've been experiencing. So I think a lot of people may look to other ways to get a greater rate of return. Okay, total tangent there was great. Come to Florida. You know, we all live in places, obviously, without question. We live somewhere. Florida's great. I love beaches. I love warm weather. I don't like hurricanes. And I don't like the idea that I have a season where I have to worry about my house being completely destroyed. Now, if I were to move to Florida, I would probably build a concrete house on stilts with full-on storm shutters and like I had in Italy. Awesome. But Florida's probably not for me. One of the great things I think about Florida is I can get on a boat and I can go to the Caribbean, I can go to the Bahamas and all that actually relatively quickly. Now, someone said about Texas. I actually had real estate in Texas, which I sold in 2016, unfortunately, because it had a huge surge from there. There's different parts of Texas. It's really difficult because, you know, you got to find a place that fits your lifestyle, that fits your personality, that fits your interests, and find common people. And it's hard to do. It really is hard to find that real place that you resonate with. Lisa says homeowners insurance is through the roof. Yeah, same in Southern California, right? With all the fires we have, and obviously I would never move to Oklahoma. Sorry for anybody who lives out there. That just, you're living in Tornado Alley. That's a tough one. Property taxes in Texas is insane. Yes. So you know they get you one way, don't they, Steven? So you're like, oh wow, in Texas you don't have state income tax. Okay, yeah, that's great, but your property taxes are way higher. Florida as well. So yeah, I don't know. We'll see. California, there's a lot of things I love about this state, and there's some things I definitely dislike about this state as well, but I would argue that's the same for any state that I were to go to. I certainly like warmer climates, but anyway, that was all started with the talk about housing, and you know, it's definitely cooled off. We can check here just on that Case-Shiller Composite 20 Home Price Index. Is very clear that the price appreciation has slowed down significantly, and I think that might deter new buyers, and therefore we're seeing prices drop. So we'll keep our eye on that one over the next few months, because I do think that will start to play a factor in the markets going forward. If the housing market really starts to deteriorate, then that could have a much bigger economic impact. Lisa, my electric bill is up 40% from 1 year ago. Well, if they're in California, that's because of our utility system was a mess. But if you're in Arizona, I mean, you got to pay that much anyway for air conditioning. Concrete does make a lot of sense. Absolutely. If you know it's in a place where that's going to happen, right? In California, a concrete house would not be a good idea because of earthquakes. You want something wood because of the flexibility that lumber offers. Oh, Lisa, you're in New Jersey. Ooh, a Jersey girl, huh? Jersey. There's another place I probably wouldn't live. I went to Atlantic City to go see a Fish concert, obviously. And, Atlantic City is interesting. You have that they always do like the boardwalk and make it look so sensational and fun and great. You go one block off that boardwalk, and that is a pretty shady place, man. You can get jumped over there real quick. Okay, off topic. Let's go back to, I'm going to do this one. Let's just dive right into this piece, which is market timing. Now, there are professionals out there that say that you cannot time the markets, and I want to go into one that I have been making trades on, and I'm getting my butt handed to me, which you guys know is Circle. So Circle, I will bring up the chart here, had a monster day today. Ridiculous. Absolutely ridiculous. It was up 33% today. It was up another 4% in the after-hour session. I will tell you, timing is everything. And of course, that's why I have this graphic, because it's got a bull, a clock, and a guy holding his head. It's like, what in the hell is going on? This stock is going to plummet, okay? This stock is going to absolutely plummet. And there is an interesting piece that I've emphasized before on companies like VinFast, and has to do with outstanding shares and float. You guys remember that discussion? So I'll go over here real quick. Let me bring up, let me go to Yahoo Finance, and I want to show this one to you. Andre says, does it have to do with the Genius Act? Absolutely is a piece of it. It's a piece of it, but there's something more important. Since Coinbase is one of the owners of Circle, as well as BlackRock, as well as Goldman Sachs, there's major institutional money here. So this is a huge win for Coinbase, which is an exchange, and now is going to price all of those cryptocurrencies in USDC versus Tether. They're migrated off that already, but now they'll be focused on USDC. And now they're going to start to set up payment rails for institutions, banks, businesses using USDC. We talked about Shopify is now accepting digital asset payments on all their businesses. You can pay with USDC. Who's that done through? Coinbase. So Coinbase is really lining up to be a huge money hub here, if you will, using USDC. So why did Coin rocket? That's part of it, Garfield. Coinbase rocked because of the Genius Act, right? They benefit massively from this because they already have a stable coin that meets all the requirements, all the guidelines that they're putting in place. USDC is already there. So this is a huge win. Now, Tether, on the other hand, doesn't meet the parameters that the US has just said, we want these parameters to be a stable coin. Right? Tether does not have a clear audited trail of their investments. Tether is not in US government bonds exclusively. They are in all kinds of government bonds around the world, as well as corporate bonds. So Tether, and I'm not sure how this is going to work, Tether may need to be removed from US stock exchanges or crypto exchanges. Why? Because it doesn't meet the guidelines. So this is a really huge piece. That means, and let me just bring it back up here so we can see the numbers, because that's where the tire meets the road. Let's go to CoinMarketCap. Oh, come on, Merlin. And show you the stablecoin market. Here's Tether. It's $155 billion under management, right? That's how much they've got. And you look at USDC, it's at 61. My guess is that by the end of the year, it'll be very close to these flip-flopping, because USDC is already solidifying its foothold on major US institutions. You saw Shopify. Shopify doesn't accept Tether as payment, but they accept USDC. So that gives a huge surge to Coinbase. And that's the main reason I think you saw that pop today. And I guess we should have talked about this the other day, that when that bill passes, Coinbase would probably be the biggest beneficiary. And then I guess the question I saw earlier was, well, why didn't we see all of crypto surge today? Well, it's a good question. This is really a big win for crypto, but not a lot of crypto was surging today. There were a few on here that were, positive, but most of it, on my watch list anyway, was down. Even Bitcoin was having a bit of a struggle here today. I'll go to the top. Bitcoin down 0.9%, making me a little nervous because it's teetering on that little yellow box there. But certainly, I was surprised as well, Margaret. I thought we'd see kind of euphoria in crypto. Now, remember, once we get the Genius Act done, then we have stablecoin implementations. You will start seeing within the next few months, once this is all cleared, passed, signed, locked, and delivered, all your banks are going to offer stablecoins now. And that might be USDC as the coin that they use. That would be huge for Coinbase, right? Obviously, Wells Fargo or Bank of America is going to have resistance and not want to use USDC because that's another company. Wells Fargo can issue their own stablecoins. They'll get a permit course, they'll get a permit right away because they have the assets to back it, and then they will start issuing their own. So you will start to see much more occurrences of stablecoins, which, in my opinion, opens the doorway to the average person who's not into crypto and allowing them to enter in these digital markets. So it really is peeling back the curtain and allowing the whole world to see digital assets with the approval of their government. So this is fantastic, that Genius Act. So my market timing piece, let me show you something here that I think is very interesting. When you look at Circle, I remember we talked about this. Their IPO price was $27. I actually wrote 28, but let me put 27 because I rechecked and it was 27 bucks. All right, and we'll change that line. We'll make it, that's green now. We'll make it blue because I can tell the difference here. So the blue horizontal line you see at the bottom is what it was supposed to open up at. And then before the markets open, they raised it to $31. So they increased it by $4. And your first official trade for Circle back on June 5th was $69. So it was already triple what it should have been. And now we are up here, right now it's trading at $208. That's almost a 10x. Almost a 10x. If it gets to $270, that will be 10x what they thought it was worth. This thing is completely overinflated. Now, I'm going to ask everybody here and kind of take a little time to let you send in your answers. Why do you think that this is happening? Why are we seeing such unrealistic, ridiculous moves up that are almost 10x what the underwriter said it's worth this much? Why are we seeing that? Partially FOMO, but there's a math component to it. And certainly Big Eb's right. It is FOMO. It's people going, my goodness, I got to get some of this stablecoin stuff. Get Circle. But even if you had the FOMO component, there's math that you have to pay attention to. And I'm going to bring that up here as I'm starting to see if anybody else types in. Let's go, where do I have it here? Here's Circle. Okay. Here's Circle, and I'm going to go click on statistics. So what we have is a market that is driven by FOMO, right? It's crazy. There, you can see at the bottom of the screen, I'm trying to hide it from you right now, but there are 202 million shares total. 202 million, that's all that exists of shares of Circle. Now, I'll scroll up. You guys can see right here, there's only 36 million that are out in the public. So what you have is people believing all the shares are available on the open market. Only 36 million of those are there. And I'll do some quick math for you. Let's bring it over here and show you that one. That's 36 divided by 202. That means that 18% of all the shares of Circle that are available are on the open market. That means that 82% are held off the exchange. They're not on the open market. So when those come to market, it's going to overpower any demand that was there. So you have BlackRock, Goldman Sachs, Coinbase, all holding a large amount of shares of Circle, right? They were the early investors. So the big question that Steven just says is, when will they be dumped? I did a little bit of research here, and there's a 180-day lockup. Now, it differs from project to project. Some projects are 90 days, some are 30 days. This is a 180-day lockup. So if we go and look at the chart here and go to Circle, and I'm going to zoom out. Apologize if this it's going to be a bit of a mess. I'm going to take a line, and I'm going to go straight, see if it allows me to do this, actually. I'm going to go at 180. Now, it's going to be, it should be, yeah, it's going to be miscalculated. From my estimate, it was like December 5th is when it should be 180 days. So this is showing me trading days. I need calendar days. But I believe it would be December 5th. So what that means is when we start to get near December, my guess is the cost for puts on Circle are going to elevate significantly because you have 82% of all the shares that exist are going to start to be unlocked, meaning they can now be sold. And I will tell you what, if I am BlackRock and I bought into this thing at 12 bucks or 10 bucks and I told the world it's worth 27 and it's now worth 200, I'm selling. If I've done all the valuation, remember, when they chose that $27 strike price and said this is what it's going to be, go public at, this is what it's worth, that's an elevated number. They're trying to get you to buy that number, but they want to make a bunch of money on it. And the fact that it's now, so much higher, they are chomping at the bit to unload that. So it doesn't make sense right now. The only logic is you have FOMO and you have limited supply. All the supply that's supposed to be there is not there. This is only 18% of the total shares, and everyone's chasing that 18%. So just something to keep in mind. When do your CRC long puts expire? So two of them expire this Friday. I actually did buy some July 18th puts as well. Just my last stab at it. I told myself I've got a $7,000 total loss on all these positions, and we're gonna get there one way or the other. Yeah, 208 now. Pretty crazy to think it's that valuation right now. It really is just. It does not make sense. It is complete idiocracy. So, yeah, I don't even think we have the data to give you financials and talk about, they don't even have any of their, PE ratios or anything like that. But, yeah, it's ridiculous. Honestly, if you're one of the underwriters or the early holders here, you just got to be laughing because the Genius Act did wonders for it. This is the only project that you can buy into that's publicly traded that takes advantage of the Genius Act. I mean, convenient that this thing came out just days before the Genius Act was solidified. I honestly would like to see the actual record to show who bought what. And it would not surprise me to see, and this might be the conspiracy theorist in me, I think some of you probably would agree with this, but it would not surprise me to see several, if not many, of the voting senators and people who are pushing this bill through having early access to some shares. And maybe, lobbyists going through and saying, hey, you know what? We'll sell you this up at $10 a share. It's going to go public at $27. You'll make $17 a share right off the bat. Okay, I'll vote for that. Unfortunately, that is the sliminess of politics, and the shaping of laws and the shaping of U.S. history really can be tracked back to politicians being swayed by lobbyists. I'm in the camp of I believe that it should be a criminal offense if a politician is making a vote on an issue and also getting kickbacks to promote that issue. That, to me, that should be criminal. But and Oliver says anti-Pelosi. This isn't Pelosi, man. This is not just Pelosi. Let's not, she becomes a scapegoat for all of this. But this is a nonpartisan aisle. This is issue. Democrats, Republicans, Libertarians. If you are an elected official, you're all doing this. Every single one of them. I agree with you, Lisa. I absolutely agree with you. You got the wrong job. Me too. It'd be great to be a politician, and I think that I would be different. I'm not swayed by the money side of things, and I would think I would have a fundamental obligation, at least from how I was brought up, that my job would be to make America a better place. Now, I do think that the Stablecoin Act, the Genius Act, actually does make America a better place. This helps America. It helps with the buying of treasuries. It helps with liquidity issues, meaning all the dollars are backed, and it has U.S. dollars in it, which helps stabilize the U.S. dollar as a world reserve currency. So to me, that's a good thing. Now, we'll see what happens. I have not had a chance. I wanted to take the Genius Act, run it through AI, and ask it to find anything that is not crypto related in there, because I want to see what got slipped in that bill that has nothing to do with digital assets or cryptocurrency. It was just some political party trying to make MABA, make America better again. I think it needs to be the UAA, unify America again, right? I think that we've been split, and I think a large part of that has to do with social media. I think social media is the big culprit in ruining the cohesiveness that we had as a country. I think it's not MAGA. I think America is great. We have our flaws, and I think our flaws stem from a two-party political system where one side hates the other, regardless of what they do. They could do something that's great, and the other side goes, oh, I hate that, even though they agree with it, because they can't agree with it. That's wrong. Let's just, anyway. No politics in the show, Merlin. Stop. All right, so market timing-wise, we'll see how I do with this one, but that circle, we're certainly going to keep watching this one, but today's move is just jaw-dropping and ridiculous. And again, Just so you understand, this is driven because you have very low supply. Only a small percentage of the supply is available for the retail population, and people are going nuts because of the Genius Act, thinking stablecoins are the answer, and that's why we saw this move. It will probably have a pretty significant correction, but keep in mind, I was saying that back on Monday, right? I thought we'd see a bigger sell-off, and I've been short this one since last week. So certainly those, my first 100 puts, that's going to die on the vine. That'll expire on Friday worthless. The 140 will probably expire worthless. And we're already $70 higher than my strike price. Just absolutely crazy. And then the one I bought, or the July, I did the 120s for July. Let me just real quickly check and make sure. I thought it was, I'm pretty sure it's the 120s I got for July, but let me see here real quick. Just so you guys know where I'm at. And that will put me close to my 7, but I still have another little chunk I could go with. So I did the July 18th 120s. And I got in those at $5. So I'm up ever so slightly. It's at $5.15 right now, but there we go. No property tax. No property tax, if it is even possible, will make the move from Seattle. Yeah, Seattle's not for me. I got too cold. Too cold, too gloomy. I love it. I like the culture, like some of the things up there. I like how close you are to Alaska and Canada, but nah, not for me. Let's see. They need to have the balls to put politicians trading on a ballot for citizens to vote on. Yeah, it will never happen. You know, the politicians have to make a lot of the rules that would limit their power. So if we passed a law that said no politician can buy or sell securities, even in a blind trust, they would never vote on that, right? Why would they ever vote on that? It's just handcuffing yourself, so they'll never do that. Florida. Well, Fluey, you got a nice spot down there. I think Les is actually down in Cape Canaveral area as well. All right, what else do I have on my chart? So we talked about the Fed. I talked about the Genius Act. I talked about my terrible trade right now. And actually, today was not a good day. If you look at I have MicroStrategy. MicroStrategy was down 1.6%. As you guys know, I have the 375s and the 400s, which I'm totally fine with that. I'll just sell calls against it. The only one that really was fine with me today, United Health. So I'm in UNH. That expires Friday at the 305s. And I'll continue to sell more. The premium is certainly dropping on United Health. It was really high. Now it's starting to drop, but you're going to get a pretty good 1% per week rate of return here by selling out of the money. So not too bad. So the last couple of days been a little bit of a stinger with the MicroStrategy. I was looking at some other pieces, but there was a question early on. And let's see. I got to get to my questions from you guys. It's from John. So John says, given its weakness compared to other Magnificent 7 stocks, would you buy Apple? John, you got to be new to the show, my friend. I mean that in a nice way. Let's talk about Apple here real quick. Here's my nice little AI graphic talking about Apple's weakness. First off, I can't trade Apple. I'm not allowed to trade Apple, and I'll never trade Apple ever again. And that's a self-induced thing, right? It's not the markets have told me I can't. It's just my trading style back in the late 90s was very active, high-speed day trading. I was doing, like I said, 550 trades per day. And Apple, after I did all the research, it came to realize that Apple is one that I seem to always lose with Apple. So I started to trade it more, thinking I could just make that money back. And, damn you, Apple, you're hurting me. And that made things even worse. So I put it in my trading plans on page 3, Apple logo, the red line through it. It's just I can't trade Apple ever again. So I don't care what happens to Apple. However, if we do look at the chart of it, then you should not buy Apple products, sir. Margaret, it's just what was great about Apple is how everything tied together. So you had your Apple, music player on your computer. My watch talks to my phone. My phone's trackable from my watch. It's all integrated. I may at some point switch. Some of the Samsung products are far superior, but yeah, I have a little hatred there for Apple. Anyway, let's talk about Magnificent 7 and how they all stack up. So you look at what's going on with Apple, clearly something is fundamentally broken. So John, I would argue that Apple is probably one of the more significantly impacted by these tariffs. You've had President Trump call him out specifically saying bring manufacturing back or you're going to get tariffs. You also have deals with China and tariffs on technology there, which are not done yet, right? We've got a pause on the reciprocal tariffs until July 9th. That could flare up and hurt them again. So if you look at the Magnificent 7, Obviously, you've got Tesla, which is underperforming, but I think that's just due to Elon Musk's political involvement and you love him or you hate him kind of attitude now and polarizing his constituency. NVIDIA's looking great just because it's the king of AI, even though there is potential issues there with China. You have, let's go, Microsoft. Microsoft kind of built a moat around itself. It looking phenomenal. I mean, Magnificent Seven, who would have thought that Microsoft's the best performing of the Magnificent Seven? I mean, just absolutely incredible what's going on with Microsoft. Great. Meta. So Meta's still off its highs from February, but the run has been fantastic. It looks pretty strong here. You have Amazon, certainly weaker. It's off the highs for the year. It's actually, we're down on the year for Amazon, which is rare, right? Which is rare. And then you have Google. So out of those, Google is certainly underperforming this year as well. You have the worst two performers are Google and Apple. Now, Google, as we know, has major issues because of antitrust, talking about splitting the company up, and that still is looming over it. Plus, I think losing a lot of market share to AI and AI systems like ChatGPT, etc. So you go back to Apple, and your question was, given its weakness compared to other stocks, would you buy Apple? Personally, I would say no. I think what you want to do in a market like this is you want to go with the winners, and that would be Microsoft. So what do? Well, obviously buying Microsoft right now would be a foolish idea because it's at all-time highs. So I would argue you're going to look for a level where it pulls back to and join that uptrend. In the case of Apple, you'd be joining a downtrend, right? You have lower lows and lower highs going back into December of last year. That does not look good. And, Apple used to be the darling stock. It was the biggest component of the NASDAQ, a huge impact on the S&P 500. It's just not there right now. And maybe people are just bored with it. They're static products, their liquid screen, whatever garbage that was. Yeah, I don't know. John, I personally, if I could, so let's erase my trading plan and say I could trade anything, I still wouldn't go for it. I would not be going for it. I would be waiting for it to convince me that this thing is turning around because a lot of the other Magnificent Sevens, our tech leaders, are looking way better, right? Google has huge issues in front of it and it's performing better. Amazon, better. Meta, way better. NVIDIA, obviously way better. Tesla, let's see, Tesla for the year, I think. Let me just gauge how much Tesla is down for the year. That's from December, and here we are today. It was up today. So Tesla for the year, currently down 24%. Okay, that's not great. Let's go to Apple and see where Apple's at for the year. Bear with me as I draw some of these lines on the screen to find out exactly where price is. There we go. And from that, it looks like Apple, since it was up today, is down 21%. So Tesla is worse performing technically this year than Apple, but I would contend that that's self-induced, right? Sold my Apple too, IBM, Microsoft. Oh, IBM not Magnificent 7, but we could certainly look at IBM. IBM just, what? IBM, crazy. AI. They got their own little AI. Watson. It's funny, I've been hearing about Watson for years now, and now all of a sudden everyone's got their version of what a Watson is. Oliver says, Tesla's getting on my nerves. I wish Elon stayed out of politics. Yeah, I do too. I like the fact that I think he just doesn't care. And let me rephrase that. I like the fact that Elon Musk doesn't care what people think about him. He wants to make change. He wants to make it better. But going in to Washington, D.C. and trying to clean up that house is mission impossible. You're going to have to, it's like they say, how do you eat an elephant? One bite at a time. I think that they tried to do too much too quick and push things through that may not have been constitutional. Who knows? That's a big area of debate. But especially if you're a Tesla owner, you've got to be so angry at Elon Musk. That said, it could also give you the opportunity to buy shares of Tesla much lower, as it's most likely, at least in my opinion, going to be going higher and higher and higher. But see, baby, if you look at, in reading the book on Elon Musk, it's really interesting to see how he has moved from business to business and his attitude towards it. He doesn't care. He's not worried about losing money in the short run because in the long run, he's playing the long game, which I respect that. Even listening to the feud between Bill Gates and Elon Musk, where it sounds like Elon Musk was the one who kind of destroyed that relationship. Kind of funny, when he first met Bill Gates was interested in SpaceX and all this stuff, and Bill Gates says that Elon Musk was kind of off his rocker and just going on and on and on about Mars and the end of Earth and all that type of stuff. And I guess Bill Gates had a large short position, like $1 billion short position on Tesla. And so Musk was like, I'm not doing business with you. You're shorting my company. You're shorting the one company that is helping out the environment more than anybody. And this was kind of a funny one. Big guy said he met his match with the U.S. government. Yeah, that's true. And Margaret says Elon can't control his tongue. Yeah, sometimes I feel like he has Tourette's because he just says whatever comes to mind. And that can be a dangerous thing, particularly in Washington, right? We all saw how that feud between Trump went from, bromance. I thought we were going to see pictures of them in bathing suits jumping in the lakes together to all of a sudden total hostility and hating each other and insults thrown. We're living in a soap opera, folks. We're living in a soap opera. So, John, personally, I wouldn't buy Apple. The chart just doesn't warrant it. We're in a market right now where things feel like they're doing rather well, right? So let's just go back to the broad market here. Here's your S&P. The S&P is encroaching on all-time highs. It looks really good right now, and the economic data looks pretty good. So that would lead me to look for companies that are strong and going with this trend. And then when I run through that Magnificent Seven list, Tesla, certainly since the March lows, is doing a lot better, but still beaten down. You have Nvidia, phenomenal, right? It's right near all-time highs as well. You have Microsoft, already through all-time highs, great run. Same with Meta. Meta just a huge run. Amazon, great run. Google even had a pretty decent run. And then, there's Apple. Out of our Magnificent Seven, it's almost like it should be removed. It does not look anything like this. It doesn't look anything like the rest of the crew. So I would not want to buy that one because we're in a market environment where things should be rather bullish, and they should all be pointing the upside. Now, I know what you're thinking here, and this is, I think we got a guy named Michael Anthony who usually comes in here late, and he likes to find stocks that are beaten down, and he would probably point to this going, Apple's a great company, they're always beating earnings, and they got product, and you wouldn't be wrong. But does this pain continue? And the trend is your friend to the bend at the end. And yes, it bounced back here in April, but it really hasn't had that rebound. And for the past month, it's been getting weaker and weaker and weaker and weaker. So strange. I don't know why. I have my ideas as to why it looks this bad, but I wouldn't want to catch this falling knife. I'd rather join the train of other ones that are looking much, 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 much better. All right. Let me see. The bigger challenge. I don't know. Let's see what we got. There's a hilarious meme video. I didn't see the meme video. I just took the pictures of them like crying at each other and looking all sad. It was pretty funny. Nope. It needs to be a $10 stock to trade. Yeah, exactly. You're talking about Michael? Yeah, it's got to be under $10 for him to trade it. So Steven brings up a good point. And Steven, I think you're totally right. He says, I think Apple gets a big bump once the tariffs are solved. True. But, now you're playing a what-if game that, from a risk perspective, takes on too much risk, right? I agree with you. Totally agree that if this all gets resolved, Apple will probably have a nice pop. However, we don't know that this is going to get resolved anytime soon. If Trump does decide to put those reciprocal tariffs back on China or increase tariffs or play hardball with Apple specifically, as he already has done, that could mean more downside moves. So you're taking a real big speculative bet, assuming that there'll be a big pop at some point, and you may be right. Again, goes back to market timing. And for me, it's just not worth it. But again, everybody can do their own thing. All right, so let me see. I'm going to wrap up here. Let me just real quickly show you what happened, or the economic announcements for mañana, and then earnings as well. So as far as tomorrow goes, market's closed. I'm not going to be doing anything. I will not be doing a show. So we'll just leave it there. There is, if you are trading some of the currency markets which are open, you can see the Swiss franc has a rate announcement tomorrow. They're expected to cut 25 basis points down to 0. Going 0 for the Swiss National Bank. And also the Bank of England, BOE, will be doing a rate announcement. That's going to be at 7 a.m. tomorrow. So for you Forex guys out there, that could be an opportunity. And the expectation is they're going to stay the same. If you notice, there is what's called the MPC bank rate votes. In the previous meeting, 7 members were saying to lower, and 2 said stay the same. Right now, 2 are saying to lower, and 7 are saying stay the same. That's the expectation anyway, so that's how it's going to go. And that, my friends, I think will do it for today. That's it. I hope you guys have a great day tomorrow, even though the equity markets are closed. We will reconvene on Friday. We'll have Bill Addis on the program. We'll talk about interest rates. We'll dive deeper into this dot plot and see what what Bill's takes are on it. I think that there is certainly some pieces here that we can take from that dot plot about the future of rates and see if Bill has changed his course. He talked about, there it is right there. He talked about one rate hike this year, and now all of a sudden that may change. So again, thank you guys so much. And by the way, thanks to all of you. I see you guys are becoming a bit more active. Again, I've only had it open a couple days, but I saw Ed in there and Lisa and Chad, Steve, Jim, all chatting in the Discord group today. So thank you guys. I haven't had a chance to jump in. I've just been so busy all day long. So Oliver says I might test option or circle as a straight option call. Let me be real careful in this. Be very careful in this one. I would encourage you to not do anything with shares outright. Like, don't short outright shares if you can find them. Your broker will tell you if you can get them or not. Most likely they're going to be hard to borrow. I would not short shares outright. The reason I've been doing the options is I have defined risk, right? So I know that on the current 140 puts, that's a $3,000 trade. On the 110, that was $3,000 trade. I've got another $2,000. So I know my defined risk on these ones. If you do straight outright stock shares, short it, you have infinite loss potential, and this thing's really dangerous. I mean, it could keep on going and going and going, so be very careful. All right, that's going to do it for me, everybody. If you have any comments, questions, feedback, things you want me to talk about with Bill, I got an extra day to prepare, so send them in at tradermerlin@gmail.com, or put them down below any of the YouTube videos, or maybe I'll see you guys in the Discord room. Take care, everybody. Have a fantastic remainder of your day.